Hey, everybody. I've been thinking, I was reading a couple of articles recently, and I've been thinking about this affordability problem. Everybody is talking about housing affordability and what a problem this is. And I don't disagree with that at all. But the question is this happening because there has been such a massive run up in prices? And as you know, if you've studied my work with the Hartman Comparison Index, that is questionable, right? There's a lot of ways to peel back that onion and look at affordability. Or is it something else? And are we headed for a much, much more severe housing shortage? Now, before we get into it, I want to say once again that all real estate is local. In the US, it's a large and diverse country with a lot of housing markets, nearly 400 MSAs or statistical areas, blah, blah, blah. uh, so you've got almost 400 of those. You've got over 3,100 counties, and you've got thousands and thousands of cities. And even a city would not be considered a market, right? Because it's almost neighborhood by neighborhood with real estate. So that's the first thing to understand. And then divide them up into three basic categories: linear markets, cyclical markets, and hybrid markets. But that notwithstanding, I think there is a possibility for a much more severe housing shortage in the future than we are seeing now. And it's already pretty bad. So let's dive into it. So, two things inspired me to talk about this today. One was a recent newsletter from John Burns Real Estate, and he's got a big real estate consulting firm, and so we'll look at some of his data, but also an article from Realtor.com talking about the death of the starter home, that entry level house that investors love. Our clients love it, right? We've been selling properties to investors like that for a long, long time. And they love these entry level cookie cutter, bread and butter, whatever you want to call them, these entry level houses. So it's all of these things combined into maybe a perfect storm. So let's take a look at this and kind of peel back the layers of the onion. So with the Hartman Comparison Index, I think proven that housing affordability is not as bad as some would make it out to be in the news media, right? But we're not going to go into the HCI today. You can see that on other videos. It answers the most important question in life, which is compared to what? That is the question. And when we look at housing, we compare it to what else is available on the market. When we're renting, we think, okay, should we buy? What can we buy? Will we be better off in a home we buy? Maybe we would from an investment standpoint, but how about from a lifestyle standpoint? So, all of these things are big comparison questions. They are always the compared to what question, very important. And what's happening in housing is also happening in other areas of life. One is cars, the auto industry. So CNBC did this interesting video that I recently watched and watched part of it again. Why cheap cars are disappearing. And we're going to talk about this as it relates to housing, but it's also true in other parts of the economy. So here's the John Burns stuff, and this is pretty interesting. And so this is basic inflation, cost increases, supply chain shortages, supply demand shock, which we talked about a year ago, February. Before anybody was talking about this, we were talking about it. And certainly we're seeing a lot of supply shock now. We've got cargo ships waiting, sitting in the ocean that can't unload in the ports. It's absolutely crazy. And boy, if they would just go to Northern California, Northern California turned them away in the past, so they don't want to go back there to unload their ships. So they're waiting outside the port of Los Angeles, right? And it's a huge problem. But our governor here in Florida, DeSantis, he's done something very bright. He's really invited and welcomed those cargo ships in. He's welcomed police officers, offering them a bonus if they're moving from somewhere else in the country. So doing all kinds of super smart things. But notwithstanding, looking at what's happened with construction materials. Remember, it's all about packaged commodities investing. A house is nothing more than a set of commodities that is assembled, that is packaged on a lot that you can buy, right? So, what has happened here? Well, I was talking about this on the podcast the other day, but let's just talk about it here. So, framing and block prices up 15.3%, lumber up 57.2%. Now, that went up even higher, but it came back down. The wrapping, that goes around the houses, right? 8.8% increases. Lighting, 17.6%. Steel and aluminum, almost 27%. Flooring, 9% almost. Windows and door, the trim for windows and doors, 16%. Looking at the other side, roofing materials, 12%. Insulation, almost 12%. Drywall, 11%. Vinyl siding, 17%, basically. So it's just massive, massive increases. And a lot of people would think this is what's causing the affordability problem. And they're not wrong, but there's more to it than this. There's more to it than this. And by the way, put in the comments where you're watching from, and also what you think about these increases. What is causing this housing shortage, right? So All Nighter Hider says multifaceted attack on the supply chain, certainly true. JBL, firefighters, police force, and other companies, yes, Florida is doing a great job at attracting them. No question about that. Okay, so here's the Realtor.com article, and this is, I took screenshots of a lot of this article because a lot of it is worth talking about. It's very, very insightful. And it's entitled The Death of the Starter Home. Where have all the small houses gone? And what we'll see here is that this is a multifaceted situation, but certainly one of the big parts of it, like it is with the auto manufacturers, is that developers, home builders, are finding that it's just not really profitable for them to build these starter homes. Right now, look, if you build starter homes, you have a much bigger, wider market, and a lot of people line up to buy them. Investors, institutional investors, as well as mom and pop investors, and first time buyers. But they're simply not building these houses anymore. They're virtually non existent in terms of new home construction. So the article talks about the near disappearance of the classic American starter home, the smaller, more affordable entry level abode that have long been the sweet spot for first time buyers in the marketplace. It's not there. And home buyers, understandably, are upset about this because the article's saying they did everything they were supposed to do. They got a college degree, and of course, they're massively indebted from that college degree, which is another complete scam we've talked about before. They've taken care of their credit scores, they got a steady, high-paying job, and they still can't afford to buy because there's just a complete vacuum, a lack of these starter homes in the marketplace. Look at this chart. This is absolutely mind-boggling. Less than half in terms of number. Now, the article talks about how there's no exact definition of a starter home, but most people would think, it's a smaller home, right? It's maybe 1,500 to 2,000 square feet, something like that. Well, in terms of these numbers, look at the listing count of what's considered starter homes, right? Just in 2017, 654,000 of them on the market. Now, less than half of that, 303,000. This is nationwide in a huge market, a huge housing marketplace like the United States. Just a massive decline in starter homes. And look, relatively speaking, nobody was saying back in 2017 that there was enough inventory of starter homes. So even back then, anybody you would have talked to would have said there is a shortage of starter housing. And now we have less than half of that in terms of supply. So this is a significant problem. Here's what they talk about in terms of the definition: less than 2,000 square feet with a lower price tag. So first time buyers can afford it. Maybe, including single family homes, condos, townhomes under 1,850 square feet. right? So Ali Wolf talks about this. She's been on the show a few times. She's the chief economist for Zonda and Myers Research. And look at this one, right? So starter homes no longer have starter prices. Now, this one you got to take with a grain of salt because, again, it's not about the price of the home, it's about the payment. Almost everybody buys the house based on the monthly payment, not the price. And so that payment has been dramatically reduced with today's very, very low interest rates. But still, it's pretty shocking. And it's not because that same apples to apples home is necessarily less affordable. In fact, I've proven with the Hartman comparison index that it's actually more affordable. But there is a complete lack of supply of these types of homes. That is the bigger, larger problem. Okay, so median list price for what they call starter homes in the US, 2017, $159,000. Today, above $260,000, right? So 11% higher from the same time a year ago. But look at what's happened in the last 5 years. The starter homes up 64%. They're 64% more expensive than they were in 2016, while larger homes have seen price increases that are more moderate, and but still high at 43% increases. Now, again, that's just price. That's not mortgage payment. So there's more to it than that. And then we compare it with other things in the economy. When we compare it with gold, when we compare it with rice, the basic food supply of most of the world, when we compare it with the cost of a whole bunch of other things, that's why we use the Hartman Comparison Index to better understand this. But still, a large lack of supply in terms of these starter homes in general. So, why is this? Well, they're not being built by developers. That's a big part of the problem. But who are first time buyers competing with in the marketplace when they go to buy a starter home? Who are they competing with? Well, they're competing with other first time buyers. They're competing with empty nesters who are downscaling their life, those retiring baby boomers. And the article doesn't even talk about that. They're competing with people that want to turn these properties into Airbnb properties. They're competing with mom and pop investors because these make the ideal rental properties. And they're competing with big institutional buyers. And that is a major cause of the bidding wars. These big institutional buyers like American Homes for Rent and Invitation Homes, who own tens of thousands of homes, they are your competition if you are a first time buyer. So, major housing shortage problem that we think will only get worse. So, big problem. But there's another dimension to this that is not mentioned in the article at all. And it is a prediction that I made well over a year ago now. Well over a year ago. Okay, so we're going to get to some of these markets in a moment here. But well over a year ago, I was talking about how these very low mortgage rates will cause everybody. I mean, think about it. Think about all the people that have been just spurred to refinance their homes, and all the people that have moved from urban areas to suburban markets, and they have purchased homes and they've locked in these incredibly low mortgages. And those mortgages are 3 decades long, 30-year mortgages. So if they got them last year or this year, they're basically not making the last payment on that mortgage until 2051. Just think about how significant that is. As interest rates go up, as the Fed starts tapering, are these people going to look at that mortgage as a huge asset, one that they don't want to give up? Mortgages, look, if they sell the property, they have to sell the mortgage with it. The mortgage is gone. You can't move it to another property. And if interest rates are, 100 basis points, 200 basis points, 300 basis points higher, they're not going to want to relinquish these mortgages. So, what are those people going to do? They're going to improve their house. They're going to keep their house. They're going to add on. They're going to improve it. They're going to, make it nicer, and they're going to keep it. Maybe they'll turn it into a rental because that 30-year fixed rate mortgage is such an important asset. And this is going to further exacerbate the housing shortage problem, especially in this entry level market. And you might think, well, Jason, haven't you heard about 3D printed homes? Haven't you heard about Boxable? Haven't you heard you can buy a cheap home on Amazon? These are all largely overhyped myths. And I have done YouTube videos on this. I've done many podcast episodes on it. We have interviewed the leading industry expert who has debunked the 3D printed home largely. And not to say that it's not a viable thing. I know they can build 3D printed homes, but at what price? The prices you are seeing are a shell, many times without even including a roof, and certainly not including land, engineering, HVAC, plumbing, electrical, kitchen cabinets, a whole bunch of things. They're just a shell. This $10,000 3D printed home is a total myth. Okay, so this article looks at some of the markets where you can buy these affordable starter homes. And guess what? The number one market is a market that we've recommended for many, many years, and it is Memphis, Tennessee. So in Memphis, median starter home price as of September, $150,000. That's not bad. And I've owned several properties in Memphis. I just sold 4 of my homes there to do a 1031 exchange because I wanted to move that money into the Florida market. But hey, there's nothing wrong with Memphis. Many of our clients have purchased properties in Memphis, been very happy with it. I was very happy with my investments there. But this is one of those great starter home markets. Okay. But look at the percentage change in starter homes for sale from September 2016 to 21. In 5 years, it has declined by a whopping 82%. By the way, let me just blow this up on my screen here so you can see it a little better. A whopping 82% decline in starter homes in Memphis. In Rochester, by the way, when I was a little kid, I lived in Rochester, New York. Don't remember it too well, but declined 74%. Hartford, 72% decline. Milwaukee, 70% decline. Laverne and Shirley, if you know the reference, could not afford a starter home in Milwaukee today. Indianapolis, one of our markets that we've been in many years, another big decline in Indianapolis. Another good starter home market. I've owned many properties, still own part of one in Indianapolis. So you can see that this is a significant blow to the market. It is a huge shortage. Now, it's bad for first-time buyers, and this is a real crisis, no question about it. But this is great news for investors because you are in a market where you can really depend on price increases and rental price increases. So, we'll see. We'll see what happens here. Also, if you want to learn how to make inflation work for you and take advantage of my trademark technique, we call it inflation-induced debt destruction. You see how a lot of this stuff can really be very, very valuable to you. As this inflation occurs, you as an investor doing the right thing, playing the game correctly can really benefit from it. So if you need help with any of this, reach out to us, jasonhartman.com, or if you're in the US, you can call us on the phone at 1-800-HARTMAN, but that is a US number only. So if you're somewhere outside of the US, jasonhartman.com, and we're happy to help you. Thanks for listening. Appreciate it. Shout outs to Rick, All Nighter Hider, Jason, JBL, Jim, and another Jason, and Ramin, DJ, Jim. Thanks for joining us. We really appreciate it. And I'll grab some of your questions maybe in the chat after I end the broadcast. But happy investing to everybody. Reach out to us if you need us, jasonhartman.com. And thanks for watching.